Everybody and their grandmother is talking about the Bitcoin ETF, but what nobody is talking about is what the hell is actually going on with it. What are we actually looking at? What's stopping it? Why is it getting delayed? Who's actually pushing it forward? And what does the overall landscape look like? And perhaps most importantly, for a YouTube channel like this, what does it mean for the Bitcoin price? We're going to be answering all of those questions in today's video. This is another deep dive. You guys loved the last one I did on Binance, so check that out. If you missed it, make sure you do smash up the likes and check that you're subscribed as you come along in here, because you are going to love this one. Strap yourself in. And before we get into any of that, let's talk about the Bitcoin price action right here on the short term. We've seen a beautiful rally up for Bitcoin coming off the support levels that we were expecting, which is absolutely phenomenal. This does not come as a surprise. We had a lot of consolidation back here throughout August and September. So naturally, after rallying higher and setting what is now very clearly a higher low, we have been able to ride higher. So that is absolutely fantastic. We're now finding a little bit of resistance in a range that we've also been expecting as resistance. This is an area that gave Bitcoin a very nasty rejection, if we don't count this wick right here way back at the end of August now. And all the way now on the first day of October, we are still struggling at this level, but this shouldn't come as too much of a surprise. We knew that this was a resistance level, and what we're doing, which is absolutely fantastic, is we are repeatedly coming back to attack this level of resistance. The more we attack these levels of resistance, as we know very well by now, those of you that have been watching this channel are going to know this just off the back of your hand, the more you tackle these areas of resistance or support, the more likely you are to eventually break them. So to me, Bitcoin continues to place itself in a good position in this market, and specifically doing so while everybody else cannot believe what's going on. Everybody else cannot digest what's going on, and everybody else is still burying their head deep in the sand of the pits of Bearland. So there we go. That's a very, very quick look at what we are seeing here. And what I want to discuss with you much more than all of that stuff right now is the situation with the Bitcoin ETFs. Because if we take a look at the situation with Bitcoin's ETFs, the reason people are so excited for this stuff is because if we get a spot Bitcoin ETF, that means we're essentially going to have a lot more money able to enter the crypto space through basically nice, shiny, regulated channels. Okay? Right now, people like you and I can buy Bitcoin super easily, and that's totally great. But if you are a big institutional player and you've got billions of dollars that you want to enter the crypto market with, you have a lot more scrutiny on your back, and you need to do it through things like ETFs. And this is what's really interesting, because if we actually pay attention to the facts, and of course that's what this YouTube channel is all about, we're not looking to sensationalize anything, we're just bringing information right down to its core, looking at everything at face value, understanding what's actually going on without the emotion, without the hype. If we do that, the first thing that we have to acknowledge is that there are already a ton of Bitcoin ETFs. In fact, the first Ethereum ETF actually went live just a few days ago as well. This is a really important note. We've already had ETFs hit the market, and this is really, really important to keep in mind. But what's the difference? The difference is that the ETFs that have already hit the market, the ones that nobody is taking to be significantly, nobody's really considering these things to be a big deal, is they are futures ETFs, okay? And what that means is it's like the trading that I do. You know, when I'm trading Bitcoin, you guys already know the deal. I'm doing it with Bybit, linked in the description down below, is my #1 primary exchange. BingX, a great substitute because they don't require KYC and they give access to traditional finance markets. Both really well worth checking out, by the way. It's like over 160K in bonuses just with these two links in the description, so definitely do check them out. When I'm trading derivatives. It's not actually real Bitcoin. And that's what's going on with these ETFs as well. Now, the difference with the big names that you've already heard, like BlackRock and Grayscale and so on, is that they are looking to get spot ETFs. That means buying real Bitcoin. The only way that you can use these spot ETFs is if you actually buy real Bitcoins in the market. And the reason that everyone's getting a chubby over this stuff is because it probably means that a lot more money is going to be able to flood into these markets and drive the price higher. Now, before you get excited, before you start getting that lotion out and getting super over the top with your excitement about what's going on, let me first preface this by telling you guys, by reminding you guys how the world works. You and I are normal people, okay? We're not fucking big players. We're not, bankers or anything like that. We are normal people. Banks do not give people like us money, okay? Let's just get this straight out of the way. Whatever fucking bullshit fantasy you have that banks and institutional players and BlackRock and you name it, Vanguard, whoever, is going to come in and save your fucking finances and get you rich again so that you get your ex back and you can start partying on yachts in Miami again. It ain't fucking happening, bro. That is not how it works. When big players enter the space, I'll tell you how they enter. They enter by crashing the market first. And then, while they're doing that, telling you that everything is dying and everything's looking horrible, and then when they're at the bottom, they are buying while you are shitting yourself thinking that everything is over and you may as well just go back to your day job, and they'll actually change their tone when they're ready, when they've accumulated enough Bitcoin. I don't know if this rings a bell for any of you guys, but let me just type in a name that was very famous for doing exactly that, okay? So we've seen this before. We understand how it works. I do not want you guys to get carried away with the hype with things like this in the market. But here's where we ended up earlier in the year. BlackRock ended up filing an ETF application with the SEC. And unfortunately, the SEC did not approve it because they felt like it lacked surveillance sharing details. So basically, a lot of the time when the SEC has been blocking these applications, it's come down to anti-money laundering and so on, and look, let's just be fucking real, guys. We know, like, crypto is just easier to do this kind of shit if you want to, and it's not super easy to protect against those things or to prevent those things. So, yeah, like, there's one side of the discussion which we're going to dive deep into where Gary Gensler is a fucking bitch and we hate him and whatever, and everyone's talking about that and everyone's got that opinion. And you know what? I actually kind of, like, don't fully disagree. But the other side of this, which, as realists, you and I, which we're going to discuss, is that dude's got a point, right? Like, in normal finance, if you look at the way things work in the United States, everything is so heavily regulated. Everything is so tightly controlled by the government, and you really can't overstep any boundaries. And even if you wanted to, you couldn't, because private entities are so tightly held by these regulations as well, that crypto, even with safeguards, just isn't that, okay? And that's one of the big reasons that we haven't been able to see the approval of these ETFs yet. But before we actually go to that, you know the deal. I am a TA-focused channel. The number one thing that I'm interested in is making cash. And what I want to focus on is gold's ETF, okay? Because if we take a look at gold for a little bit of background, what we had with gold was a price top back here in 1980, where gold topped out at, I don't know, what was this, like $730, call it, close to $1,850. And it entered a very long 20-year bear market. I mean, you guys think that we're suffering right now with Bitcoin. This is what the markets look like pre-widespread internet access. So we're moving quick, ladies and gents. Let's not lose perspective of that. And what we actually had was like I said, 20-year bear market. And it was for a few different reasons. There was a few different reasons that people were not super happy to be in gold, but one of the big ones was obviously there was the gold seizures from governments around the world, specifically the United States. It was the fact that central banks kept on selling it. I mean, the dollar wasn't even backed by gold. That changed in the 20th century, and of course sales taxes and stuff like that. So gold just wasn't a very sexy asset to be holding until, of course, we had that gold ETF come around the corner. We're going to get to that in just a little bit, but here's something that's really interesting. See, gold had this downtrend line for, basically 20 years, and we only managed to break it back here. We started the uptrend in 2001, but we only managed to break it back here around 2003, and of course, it very interestingly lines up with the release of the ETF. If we take a look at some of these annotations here, the first gold ETF was launched in Australia on their securities exchange back in 2003. That was just shortly before the downtrend was broken. Just a couple years after that, the US launched their own first gold ETF. So this is, again, a possibility, an avenue for massive institutions to put their money into gold in a very happily regulated environment where it's super safe to do so. And that, obviously, as we can see with these charts, made history. The same annotations that you've just seen, if we apply them to the chart across the long term, gold managed to rally some 400% within the next 10 or so years, which was absolutely fantastic. Even less than that, actually, which is absolutely fantastic. 400% there, and again, I mean, as crypto guys, like 400%, we fucking have that for breakfast, right? But this is gold, okay? This is, at current stage, how many trillions of dollars is its market cap? It's like 10 trillion, right? I might be completely wrong about that, but it's a huge market. For gold to go up by a factor of 5x, okay, plus 400% is a factor of 5x. That is absolutely huge. That happened within such a short period of time as well, which is just absolutely fantastic. It shows us that, and we're not saying that correlation equals causation here. The fact that gold's run up, the fact that gold breaking its downtrend happened to correlate. Its 20-year downtrend being broken happened to correlate with the ETF launch. We're not saying that. Obviously, we can't, that's a dangerous path to go down. But, I mean, if we look at the fundamental factors at play here, the fact that so much more money actually had the opportunity to enter the market at these stages, I don't think it's far-fetched to argue that this did play a big role in gold being able to rally up. What would happen if the same thing were applied to Bitcoin, the digital version of gold? If we try to be conservative about it and just look at Bitcoin's price right now, and let's say that, maybe Bitcoin manages to pull off the same 5 times gain from right here, well, that still takes Bitcoin from, let's just call it 30K to be easy. If it manages to pull off a 5x gain, that's still a $150,000 Bitcoin that we would be seeing if the same gain were to happen within the next it would be a long time. For gold, it was whatever, call it 8 years. For Bitcoin, maybe we cut that down to 2-3 years. I think that's reasonable. What do you think? I don't know. Let me know in the comment section down below. But Bitcoin obviously moves way faster. Even 3 years, to be honest, is very, very conservative. I mean, this is the kind of thing that we could see happening within 6 to 9 months, 12 months at most, especially when we consider that we've got the halving coming up. And this is also actually a really interesting discussion because all of this ETF news, which we're about to dive really deep into right now on this video, it's the next thing that I want to cover with you here, is really interesting that it's getting delayed and stuff like that because it's kind of just pushing us. Like the deadline for the SEC's decision on BlackRock's ETF is February 10th, if I'm not mistaken, of next year. And if you've been paying attention, when is Bitcoin's halving? Let's actually take a look at this on this website right here that everybody is always looking at for the Bitcoin halving. Bitcoin's halving happens to fall around the same kind of time of year. We're looking at May of 2024. So basically 3 months later. I mean, the time frames are so damn close and they make so much sense that you really do have to, kind of look up and scratch your head and be like, all right, maybe there is something here. And that's only if Bitcoin pulls off the same gain that gold had. We know that Bitcoin is way smaller now, and therefore perhaps in a much better position to rally up in the face of that kind of news. But let's get down to it. What the fuck is actually going on with the Bitcoin ETF? It's actually really interesting because what we had was, if we take a look at this article right here, 2 weeks after BlackRock filed their ETF application, we saw other players, Fidelity, resubmitting. We've seen other competition from Grayscale as well. Obviously, one of the big things that we've been focusing on in this space that everybody has been talking about is the fact that I haven't actually spoken about it too much with you guys, is the fact that Grayscale actually took the SEC to court because the SEC just rejected their application without actually giving an explanation for what's going on. And this is really interesting because, as you might know if you were watching the news, it was actually a really big article, it was a really big headline, is that when that court case was concluded, it was actually concluded in favor of Grayscale. And that's really interesting because if you've been paying attention to the way the waves, the motions have been kind of, moving, like which direction things have been going in, we've seen a court case rule against the SEC. We've seen members of Congress just rip into Gary Gensler for not approving the Bitcoin ETFs. We've seen massive public opinion shifting in favor of ETFs. We've seen massive asset management companies like BlackRock with access to over $1 trillion in capital. Did I say that right? I'm pretty sure. It's a fucking massive number. It's too big to comprehend. All putting pressure on the SEC. And it really starts putting the SEC in a position where they're kind of starting to look like they're in a losing position. They're kind of starting to look like they're on their back foot here, and they're really struggling to hold their ground, especially with that decisive court loss that everybody was talking about. And this was only a month ago. This is very, very recent as far as the way these kind of things move, the speed at which these kind of things move at. This is pretty soon. This is pretty recent. But of course, we have to stay realistic here. This actually only means for Grayscale that the SEC just has to look at their application again. It doesn't mean that the court said, no, you have to approve it. The SEC only has to reassess the application. And even that, they can actually appeal if they feel like the court did something wrong and put forward a reasoning for why they think the court had, a bad, kind of process in their overall conclusion there. So it's not like Grayscale won the war, but they certainly did win a battle. And again, what we're really focusing on, what really makes this significant, and it's actually written here very, very nicely, is that whatever happens here, a denial by the SEC will be politically untenable. Ultimately, what we're looking at with the SEC is that they are, from all different angles, kind of losing power, which I think is actually really, really interesting. If we're talking about tides starting to shift, we've already got these pieces right here in front of us, showing us that the SEC, like I said, is potentially just kind of on their back foot right now. And by the way, we know that the SEC has had a history of hating crypto. Now, by the way, Bloomberg putting this at 75% chance of approval for the ETF this year. Previously, that was at 65%, and they only changed it from 65 to 75 because of the SEC losing its case against Grayscale. But, this is the thing, is that we've already known that the SEC does not like crypto, that Gary Gensler specifically is not super crypto friendly. Not only have we seen a bunch of ETF rejections, but we've also seen crackdowns on exchanges. You guys have seen what's been going on with Binance US and so on and so forth. There has been so much going on that's just so anti-crypto in the space. And none of this is new information to us. We all know what was going on with Coinbase as well. We know what's been going on in the UK, which obviously every other Western country is just a foot soldier for the United States. Now also banning Bybit, which, by the way, puts us all in a very, very annoying position. I know that that's super, super annoying. I do want to highlight to you guys that I am using alternatives. Now, obviously, I'm still with Bybit. I'm not in the UK. It doesn't matter to me. But alternatives, like I said, do exist. And if your country has banned them, do not use them. You're not allowed to. And that means, United States, UK, so on. Like a bunch of countries have made this stuff illegal in your country. Obviously, you can't use the stuff that I'm talking to you about. If that's you, sorry about that. You're just going to have to kind of sit on the side and watch the rest of us. But if you are allowed to, then check them out, because you have got huge opportunities with the links in the description down below with enormous bonuses. Like Bybit's bonus means that whatever you trade with, you're going to get up to $30,000 in additional trading capital just by using my link when you sign up down in the description below. So that is absolutely fantastic, well worth checking out. Another thing that actually moved in favor for crypto earlier, I think it was this year, was that Ripple ended up winning a case against the SEC where they were actually declaring XRP as a security. So, that's another big headline where, essentially what they're trying to do is label all cryptos as securities. And of course, that's why they're saying it's, it gets super, super complicated. They're just claiming jurisdiction over things that really they shouldn't even be interfering in. And of course, the way they're doing that is by alleging things that, like XRP is a security. And like I said, we've seen this very anti-crypto sentiment for a very, very long time. And if we really dive down into who hates, crypto so much, it all comes down to this big name that you guys have been seeing all over the space right here. SEC's Gensler throws more crypto punches in congressional hearing. And this article only from a couple of days ago. It's actually really interesting because I've got I think I had the tweet up just a second ago I'm not going to play this for you, but you can just type this in. Just literally Gary Gensler on Twitter will show you these search results of him getting absolutely slammed by congressmen in the United States. And what's really important to note, again, we're bringing this, we're translating this, we're making this all super realistic so that we can all digest and really understand what's actually going on. What's really important to note is what was happening here wasn't actually, one branch of U.S. government putting pressure on another branch. This was just individual congressmen talking. And that's really important. I think that a lot of people are having all of this kind of stuff blown out of perspective. You look at news article headlines, you look at shit posters on Twitter and whatever else they're talking about, and these things really start getting taken out of context. Things are not as bad for the SEC as it looks. Perhaps if you're just looking at this stuff on Twitter, or if you're just digesting this information from YouTube channels that are sensationalizing this kind of thing, it's not like that. But it is still looking like tides are shifting. And that's really what this video is all about. If we, and unfortunately, this is kind of how it always turns out. If you're looking at big events like this in the market, or big fundamental analysis, kind of shifts in the market, things that are really, really significant, a lot of the time, when you dive down into the facts, what's actually happening is a lot more boring than what the sensationalized headlines are telling you. Real life, in almost all of these cases, is a lot more boring than what everybody is putting in front of you. And, again, if you've been watching me for a while, then you're going to know that that's kind of what you get on this YouTube channel. You're getting the kind of, I was one of the only guys for a very long time telling you that, Bitcoin with this set of price action right here very well could just be in a sideways trading range that looks a little bit like this. And that it could just kind of, and I said this from way back. I can't remember where exactly. It could have been here. It could have been here. It doesn't really matter. But what I was saying was, expect support down here, expect resistance up here. Bitcoin can just keep doing this right up until the halving. And I mean, that's a sentiment that I've actually been very, very vocal about, because it just makes sense. A lot of the time, I mean, you tell me, when's the last time that the market played perfectly into your hands with your long-term price predictions, where you said that in fucking December this was going to happen, followed by this in January, followed by that in February? It's just not how it works. And if you've been in the market for a while, you're going to know this. If you're new to the market, then everything is a fucking definite answer for you, because you got a high IQ and you've been listening to Bloomberg analysts and people in their fucking shitty Discord groups, and you just think that you know everything in the space. But if you've actually been around for a while and the markets have had a chance to humble you, and you've lost a shit ton of money and stuff like that, and you understand the game now, then you're going to know what I'm talking about as being pretty close to truth. That things do end up being a lot more boring than they actually seem. And that is how you can prepare for them. And, once you actually start acknowledging reality, that's only step one in making money, ladies and gents. If you're not even doing that, you've got no fucking chance. But if you've actually acknowledged reality, and you've acknowledged that, this is how things actually work in the real world, this is what price action actually looks like. We do just hit sideways boring ranges when everybody thinks this is a breakout, and everyone thinks this is a breakout, and everyone thinks this is a breakout, and this is a breakout. We just keep going sideways. When you can acknowledge that kind of thing and face that kind of reality, that's where you can start putting yourself in positions to make a lot more money from the market. I've actually continued to stay in my Tron position, as you guys know very well. I haven't actually checked on it for a little bit of time. I'm curious to see where it's at right here. You guys know I've been very, very public about all of my positions, that I've been in a Tron trade for quite some time now. Not actually that long. It's been probably just a couple of weeks, I think. It's been a couple of weeks. I'm now sitting at 146% profit. I don't know if that's going to focus for me. Yeah, you can probably start seeing that now, which I'm very, very happy about. It's not focusing. There we go. Which is absolutely fantastic. I'm still running in the same position. I mean, bottom line, everything I talk about, whether it's the SEC or Tron or Bitcoin or XRP or whatever the deal may be, I'm always talking about it from a perspective of making money out of these financial markets. I think that, something which a lot of people don't really pay attention to, it's something that a lot of people have never really even considered, is that my approach as a trader is, like, let's say we're going to get a big financial collapse. So that everyone thinks that's going to happen. It's been fucking saying this for years, whatever. It hasn't happened yet. If you're like the guys that are naysayers, that are taking their money out of the market, that have been sitting on fucking cash for years and not really doing anything, you haven't been able to make any money over the last couple of years, if that's been you. Whereas you've got a guy like me who, I'm going to concede, I'm probably not as smart as you guys with your fancy degrees who are doing all of this market research and stuff like that. I'm probably not. I'm a 22-year-old, for fuck's sake. I'm just not that guy. But Here's what is true. I've actually been in and out of the market, positioning my capital efficiently, managing my risk very well, making sure that I don't suffer big losses, making sure that I maximize big wins. I mean, this is like, the second major win I've had just in this year, in a completely dead market. We haven't even had that many trading opportunities, and I'm still pulling these kind of gains. It's absolutely insane. You don't hear of this stuff, with real traders actually happening particularly often. And I'm doing this all while acknowledging that, honestly, my goal here is like, look, if we're going to get this big crash where the market's crashed by like 60% or 40% or whatever the case may be, I would rather suffer that crash when I've made $500,000 compared to when I've only made $100,000. And I think this is where a lot of people just kind of detach from reality. You want money. You want to make money. You want to protect your money. Well, my approach, and this is, it's kind of rooted in fact, if we're being honest. It's like we look at inflation. Inflation back in the COVID days and so on, like 30% in a year, right? Well, what that means is that you needed to increase your net worth by 30% just to break even on the same purchasing power that you had pre-inflation. All right, we're just looking at real raw numbers right now. If inflation's at 30%, you got to make 30% just to break even, just so that your dollars can buy you the same stuff. And what I'm talking about is that if we're headed into this massive churn where there's going to be a massive market crash of 60% and everything's going to collapse and everyone's going to be homeless or whatever the case may be, I would rather be positioned to enter that crash when my capital is significantly higher than today. That's been my approach for a very long time, and that has served me very, very well indeed as well. When you take this kind of approach of actually just trading in the market, actually positioning your money, positioning your capital in efficient ways, managing your risk very well, you're setting yourself up to succeed in these markets. If you're just the guy that's consuming all of this stuff, all of these news articles, looking at everything that's going on without actually positioning your capital in any particular way, then you are just kind of sitting on the side, watching the ride happen, watching it go by you while people like me are still making money in these markets. And you know what? If that's you, that is totally cool. But it's not me, and that's why no matter what we're doing, whether we're talking about Binance or whether we're talking about the SEC and everything that's going on there, the number one thing that I want to keep bringing this back to, and the reason that you guys are showing up on this YouTube channel, smashing up those likes, checking that you're subscribed and all that beautiful stuff, is because we are interested in relating this back to the market to see how we can actually trade off this kind of thing and how we can actually profit off this kind of thing. And I do want to talk to you about that a little bit later on in this video, not too long later, because there are some really interesting price implications for Bitcoin that we could actually see as a result of all of this. But if we continue to look at the situation with the SEC and more specifically Gary Gensler, I mean, there is so much on this. You can actually just go ahead and look at these same articles that have been released over the last few days. What we've seen is that, the bottom line for the SEC, the bottom line for Gary Gensler is that they're not totally convinced by the anti-money laundering systems, I guess, or whatever that are in place with these ETF applications. They're not totally convinced, and they have good reasons for that, like I've already said. But at the same time, we are starting to see that kind of losing streak with courts. We are starting to see that whatever reasons they're holding are starting to weaken, whatever grip they have are starting to weaken. And one thing that I found really interesting here was some potential personal issues with the crypto space. For the SEC chair to describe crypto as a bunch of hucksters, whatever that means, probably some weird United States insult, is interesting because it can potentially, tell us a little bit about how he personally feels about crypto. I don't know what it is. Maybe his wife's boyfriend has been making a little bit too much money off crypto or something a little bit like that. But ultimately, one of his main arguments does boil down to the fact that crypto firms dangerously mix assets in a way outlawed in other corners of the financial system. So again, exactly what I was mentioning earlier on in the video, where things are possible in the crypto space that you just can't do in the rest of the financial system. And if you can't bring that in line, then the SEC is basically just saying, well, we're not going to let you do it in the first place. If there's no workaround that you guys can find, and so far there hasn't been anything that they're satisfied with, well then, we're just not going to allow you to do it in the first place. And that more or less brings us up to the present day. The SEC has again delayed its decision on the spot ETF applications for BlackRock Invesco, Bitwise. There are even more that just, have constantly been getting delayed, if not rejected. And that's where we are. There was a little bit of fear about a US government shutdown. You guys probably know about that. It's all just political drama. We know, how many times have we seen this shit in the headlines? It just never happens. But obviously everyone's gripped by it as if it's something completely, like revolutionary or a big deal or like super, super dangerous. Obviously, if we're taking that realistic step back, we're not going to be worried about that. But this was one of the reasons that, these things were just delayed, and it just, we just keep kicking the can further down the road. But I'll tell you what's really interesting, though. It's that if we actually bring things back to the charts and we actually look at, how this has worked for Bitcoin in the past, we actually had the first futures being launched on Bitcoin back with the CFTC, or was it CME? I can't remember. It was both. Chicago Mercantile Exchange back in 2017. And I've actually gone ahead and marked it for you on a chart. And those of you that are in the space back then are going to remember this really well. Let me know in the comment section, first of all, if you're in this video this late into the video. But second of all, if you actually remember this taking place in the market. Because we were all super, super excited for it. This was the date that the first futures for Bitcoin were launched. And it resulted in a massive crash for Bitcoin. So we've already kind of seen what happens when this kind of institutional interest is, first brought to the market. But there are things that are different with these BlackRock ETF applications and what we saw before. Now, the first one is that it was filed with a completely different branch of government. It was the CFTC. It's not the SEC. But second of all, this is futures. Okay, and what futures does is the fact that it's derivatives, it allows you to go short on the market. You don't actually even need to buy it. People rightly had the opinion that a lot more kind of institutional interest, institutional capital can flow into the market. And, that was true. That there was some truth to be found in those statements. But because it allowed you to go short, and specifically because you didn't have to buy any spot Bitcoin in the first place for this ETF, for this, futures being launched, it actually, immediately resulted in the market dropping. We actually saw that. From the high, it took us down to the 6K level at from 20K down to 6K within basically the space of a month or so, a little bit more than that, call it 2 months, and this was all in response to a very, very overextended market. I've kind of already touched on this earlier in the video. I was reminding you guys about how the real world works, where, real big players do not fill your fucking pockets up as you being the regular normal guy. I don't know why people have this weird fucking fantasy in their head, but if that's you, get it out of your head right now, or just don't be on my YouTube channel. I just don't want that low IQ energy around me. But obviously that's not how the world works. And if we're going about it super realistically, it's worth noting how this has gone in the past. Obviously, again, the big difference with this, what we saw back in 2017 and what we could be seeing right now here in 2023, if not 2024, is that the spot ETF will actually require you to buy more. And of course, we've kind of already looked at what happened to gold after the same thing of the same category was launched for gold as well. Now, if we're looking at where Bitcoin could actually end up going, we're basically, we're really just having a discussion about, a brand new kind of wave, a brand new leg in this bull market. We've been looking at these curved lines for quite a bit on this YouTube channel. It's not my favorite way of doing analysis, but I think it is usable, at least for the purposes of what we're discussing in today's video. Where if we just kind of trace these curved lines, it shows us Bitcoin's potential path over the next years, for its growth curve. And most importantly, we can see that its growth curve kind of tapers off. Most importantly, we can see that its growth curve is getting less and less aggressive with time, and that makes complete sense. It's a maturing market. We're not particularly, expecting the same kind of 10x every single bull market, although that could still, definitely happen. But, it's just not something that you would want to hold your breath for. But at the same time, if we are looking at something like this, pulling through for the market, towards 2024, into the first half, second half of 2024, it can quite reasonably end up putting Bitcoin in the mid to low $100,000 range. And, that can be super, super interesting. We're now talking about, at the top of this chart right here, and it is hard to see. It's a very, it's a very obscure chart to even look at in the first place. We are seeing potentially $150,000 Bitcoin target here. And again, just looking at this in the context of the kind of thing that's happened to gold in the past, looking at this in the context of all of, the fighting that the SEC has had, with Grayscale, with, Coinbase and Binance with XRP. With the fact that everyone's fighting back, and the SEC just isn't looking as strong as they've perhaps been regarded as in the past. You can start to see that things are potentially moving in that direction. It doesn't mean that it's definitely going to go that way, and it doesn't mean that we're definitely going to see these applications being approved in the first place. And if they don't get approved, then really what we've had is a lot of hype being built up over the course of this year. What are those people going to do? They've already bought a bunch of Bitcoin. Let's say there's another rejection followed by another rejection and another delay and so on and so forth. And it just keeps on going like that. Eventually, all of these people that have bought Bitcoin in anticipation of this ETF being approved are only going to have one option left, which is to sell their crypto. So, it doesn't have to go this way. But is the writing already on the wall? The fact that we're getting congressmen bashing on the chair of the SEC, the fact that all these other factors that we've been discussing are at play in the market, is the writing already on the wall? I think some would argue yes, and I'm in that camp as well. I do think that from everything I'm seeing here, it is starting to look like just a matter of time until, if nothing else, they get strong-armed into it. It kind of looks like it's going that way. We just had the first Ethereum futures ETF approved, like I said, just a few days ago. It's not like progress isn't being made here. Everything keeps on moving in this direction, and it seems like history is pushing it in that direction too. So, look, I'm not trying to make bold decisions and bold conclusions based off this kind of thing. Of course, this stuff is all still up in the air, and we have to come to the market with that approach in mind. We can't act like we have all of the answers, or that what we think is going to happen is definitely already set in stone here. But what we can do is evaluate the facts that are in front of us, look at where the charts are right now. And by the way, on that note, I do want to come back to the short-term analysis and just cover one more note with you, which is that if Bitcoin is able to get above this area of resistance that we were discussing right at the beginning of the video, then I'm seeing a potential for a big jump up for Ethereum, at least, kind of an 8-9% pump up to that next zone of resistance, which is where this kind of thing could actually get really, really interesting. So my eyes are for the short term on this area of resistance. If we lose it, my eyes are on this support. As long as we don't go below this area of support, I'm happy. We can do this. We can do anything we like. As long as we don't go below this green line, I'm happy. If we do, then it's not a great. It would be a pretty bad position for Bitcoin on the short term. But until and unless that happens, I'm just not too worried. And if we end up breaking that area of resistance, it's also going to confirm for us that we are setting higher lows and then subsequently also higher highs. So that would be quite significant. Right now, we don't have higher highs. We've only got an equal high, so potentially a double top formation, an M-shaped pattern. But, we're going to keep watching this and see how this actually plays out in the market. So there you go, guys. I hope you have enjoyed this one. You know exactly what to do if you have. Hit up the like button, subscribe, tick the bell, do all that beautiful stuff. Like I said, you're getting up to $30,000 in completely free trading capital when you use Bybit with my link in the description down below. You just got to start trading using my link, and they are going to give you that free cash in your account. If you're looking for alternatives, CoinW does not require KYC, which is absolutely fantastic. Plus, they're also going to give you $50 completely free. And BingX has got an even cooler offer. It's over 100K in bonuses with no KYC. And of course, the key thing with BingX that I love is that I can actually trade stocks like Tesla and Apple and Amazon. I can trade commodities like gold and Forex, Euro, USD, whatever the case may be. Super, super versatile exchange, all just with a Bitcoin deposit. That is a very rare combination. That's why I love them. So check them all out with the links in the description if you are interested. Thank you all so much for sticking with me throughout this video. It was another big, deep dive. I'm going to keep on putting this content out if you like it. So I want your feedback with the comment section down below. And again, while you are down there, just go ahead and check out the Twitter. We're shit posting on here. It's super fun. It's just a bunch of bullshit. We're just talking shit and having fun with it. Here's one of the tweets that you've missed from earlier today. That was super funny that I just wrote out. Men who use cutlery are pussies. Are you telling me that you, a grown man, a creature that was built for war and famine, are scared to get a bit of meat on your hand? How are you going to stack millions and grow your empire when you're one chicken wing away from a nervous breakdown? You're weak. Imagine meeting your dream girl for a romantic dinner. She sits down opposite you, dolled up to the nines, and you see her face drop in disappointment as you carefully wrap a napkin around your toothpick-sized neck and daintily clink and clang away at your chicken wings. Where's your warrior spirit? Where's your shame? just a shit post. Classic shit posting. I'm just having fun with it. Some of it's trading related. A lot of it isn't. Here, obviously, how do we avoid getting drafted for World War III? You buy and hold XRP because they can't enlist special needs people. So, just a bunch of shit posting. I'm just having fun with it. If you guys like that kind of thing, if you want to spice up your timeline a little bit, then check it out with the link in the description down below for that too. And again, I'll see you all in the next one. Cheers.